Welcome to the Coin Stories podcast, where we get to explore the future of money, business, technology, and Bitcoin's revolutionary promise to boost economic prosperity around the world and mend our broken financial system. I'm Natalie Brunell, and I'm here to learn with you. This podcast is for educational and entertainment purposes only. None of the discussions should constitute as official investment advice, and you should always do your own research. This podcast is made possible through partnerships with companies I trust, and I'm very picky about who I choose to partner with, so I hope you take the time to listen to the ad reads throughout the show. Thanks for joining me, and if you like this type of content and want to see more of it, make sure to hit that like button. All right, it's time for the show. Welcome back to Coin Stories. I am really honored for this guest, one of my most requested, the CEO and founder of ARK Invest, Cathie Wood. Cathie, thank you so much for sharing some of your valuable time with me.
Oh, I'm delighted, and you can thank Yassine Elmandra and David Puel, who Yassine leads our crypto effort. David is our on-chain analyst, and they have been singing your praises. So I'm delighted to meet you, Natalie.
Well, I'm so grateful. I just love meeting such prominent names in the space who are carrying the Bitcoin message forward. So let's kind of start the story, though, at the beginning. I heard a little bit of your origin story on Peter McCormick's show, and I know that you spent your young life, you lived part of the time in the UK and Ireland, but can you share a little bit more color? I mean, what was your upbringing like, and maybe were you always interested in working in the business world?
My upbringing, I love the fact that I moved around, probably moved, I think it was 10 times by the time I was 13, 12, something like that. And then we settled down. So, I got exposed to lots of different cultures, lots of different people. And I think it was a very important part of my growing up, moving into situations, do I trust this situation, sizing up the situation quickly. So, and, as now I'm a portfolio manager, I have to do that with companies all the time, right? So I think that was very helpful. My father inspired me. He was a design engineer. He really didn't have the education you would expect of a design engineer, but innovation levels the playing field. He became obsessed with radar systems, and he became one of the world's experts. So he was a big inspiration. Someone asked me once, who inspired you from taught you about money and finances? And until I got that question, I didn't realize how important a role my mother also played. So my father, went to work, worked really hard. And my mother was a stay-at-home mom, which is what they both wanted. And she handled all the finances. And so I learned how to budget very, very, very early. So.
Wow. I mean, that's incredible. I was actually going to ask you what was your relationship with money when you were young? Because sometimes the people I've met in this space, they've faced some sort of hardship that created a pain point where maybe they appreciated Bitcoin a little bit more. So what was your relationship with money? Were you always a really big saver? And clearly you were always interested in technology and innovation.
I absolutely was a big saver. I was almost scared to spend money because, the money was hard to come by. And so I was a babysitter starting at age 11. I was helped by my mom, of course. And then McDonald's, a supermarket, a restaurant. And then I finally, thanks to Professor Arthur Laffer, Art Laffer, I don't know if you know who he is, Natalie, big influence in my life, introduced me to Capital Group on the West Coast. And Capital Group is one of the premier research and investment houses in the world. And at that time, so this was in 1977, I was in college. And Capital was really the first investment firm to think outside the United States, and which I loved. I love that idea and wanted to be a part of that. So, yeah, I guess, and in terms of why my strong feelings about Bitcoin, well, I'm actually, I've always loved monetary policy and watched it very carefully. I went through the late 70s inflation and interest rates going up in the United States and this massive inflation by our standards. And that definitely influenced me. Like, wow, this really was at least 15 to 16 years of human error. And then we had, thank goodness, Chairman Volcker coming in, righted the ship, which was great. But then I've watched one crisis after another throughout the world, and they're usually debt related, and everybody seems surprised at the time. But they're much easier to see, I think, if one has an economics background, and just to bring that to the current day, and Yassine and David and the entire team at ARC will tell you I'm extremely focused on what's happening to the dollar versus other currencies right now. Tells me there's a dollar liquidity crisis brewing. And here again, emerging market and other currencies are going down relative to the dollar. And we're starting to see the gold price crack. We're seeing other commodity prices, ex oil and some food prices. So here we are again. This is going to cause a world of hurt. And so I've been looking, I immediately understood what Bitcoin was. And one of the reasons I did is we did a paper on Bitcoin in 2015. And Art Laffer was willing to collaborate with us. He had been asked many times to collaborate on other papers having to do with digital money or I guess it's digital cash. Never accepted those opportunities. He read our paper and really tore it apart from, in a good way, from an economics point of view. And he said, I've been waiting for this since we closed the gold exchange standard. This is a rules-based global monetary system. And this is what we need. Now, at the time, he said, I love that it's rules-based. He said, but if you want Bitcoin to serve as a means of exchange, the rule has to change. It has to become a price rule. So keep the price stable and vary the quantity. And of course, that's not going to happen. But even his thinking has evolved in that regard. We did a podcast. We've done a few podcasts with him on Bitcoin. We did one with Ophelia at 21 Shares, who is our partner in applying for a Bitcoin ETF, and Art Laffer. And, he's peeling the onion a little bit more, trying to get at the essence here. Can I really trust this? And we're going to also do a Bitcoin brainstorm with Art, more of a layman, but a real monetary scholar, kind of poking holes. He also understands cryptography, poking holes. He doesn't want to find any holes, but he just wants to poke around and help other people understand how important this movement is. But the change that has happened since that first paper 8 years ago is he can see Bitcoin as we move into futures-based products and other structured instruments. He can now see it in its current form, becoming both a means of exchange, store of value, and even unit of account.
Wow. I mean, you're right. And you talked about it in your recent report, Big Ideas 2023, just how strong the fundamentals are. So it's not a surprise that we're seeing more institutions taking Bitcoin seriously. And I want to dig into some of that, including your ETF application. But for those not familiar maybe with Art Laffer, I know he was one of your mentors, and he's famous for the Laffer curve, right? And it talked about supply side economics and, that after a certain point, taxing too much is counterproductive. Do you want to share anything anything else just in terms of what people should know about his work? And we have a little bit of a connection because he was your professor at USC, right? I taught there. So go
Oh,
Trojans.
yes. Oh, I did not know that. Oh, great, Natalie. Yes, he was trying to establish a supply side school of economics at the University of Southern California. And I was an undergraduate. His program was a graduate program. And we met over dinner through his assistant. And we were all taking night classes or doing night classes together, or different ones. And he said, why don't you come and take my courses? And I said, well, I'm an undergrad and you're in the graduate school. That's why I can't. He said, sure, you can. So I had the luxury of being a part of that program and applying it to my undergraduate degree. Now, I think there were some disagreements at the school, and so the supply side school of economics did not happen. But his experience did motivate him to start his own firm around supply side economics and really become a consulting firm to the financial services industry as we were going through the late 70s, early 80s, all of the controversies, especially around monetary policy. He was also extremely important as an advisor to Ronald Reagan. Mm-hmm. Part of Reaganomics was the Laffer tax cuts. Mm-hmm. And he actually has advised many presidents. He won't do it anymore to be reimbursed in any way. He just wants to be able to say what he thinks in its purest form, and hope they understand his many years of wisdom and take him up on it. So, yeah, I think he's been a much bigger influence on global monetary and fiscal policy than many people understand. In the 70s, Chile, he helped turn that economy around. He was part of Thatcher's turnaround in the UK as well. And sort of this supply side movement started stirring. And in the US, of course, was exemplified by Reaganomics. So in my opinion, his mentor, Robert Mundell, won a Nobel Prize for his monetary theories. And I think art should win a Nobel Prize, my humble opinion, because without much fanfare, he does not beat his chest on all of this, but he's made a big difference in a lot of countries. And I think he is so excited about Bitcoin right now being our shot around the world of, going back in the case of the United States to private money, pre-Fed. He's extremely excited about that. And so I can't wait to hear, what comes out of his mouth on our ARC brainstorm in a week or so.
Wow. Well, I'll definitely be tuning into that. And, you mentioned the monetary policy in the 70s and the inflation. And as you were, getting your career revved in the 70s and 80s, can you tell me about some of the lessons learned? Because you saw, monetary policy impact and create these sort of bubbles, rises and falls, and that ultimately probably primed you for wanting this rule-based monetary system. And I know you've been outspoken. You wrote that letter to Federal Reserve Chairman Powell about his interest rate hikes and how aggressive they were. So what are the lessons and the takeaways from your career, focusing so much as you have on research as opposed to maybe backwards looking indicators that so many people are focused on? What's the big lesson, and why is Bitcoin so important?
Well, I think monetary policy around the world is unhinged. It's completely subject to different human theories about how monetary policy should work. You've got the monetarist school, the Keynesian school, the Austrian / supply side school, but then you have on the other side of it, it's not just monetary policy, it is politics that influences monetary policy around the world. So it's not independent around the world, maybe a little more so in the United States than in other places. But I just think pure politics is much more of an influence than many people appreciate. And this idea of a rules-based monetary system, a global one, bringing the world together and, preventing some of these discontinuous moves, one country to the other, sending people into poverty and destroying, purchasing power. I think if we could have a global monetary system that is rules-based, and digital, so getting rid of some of the issues that, of course, that we've had with gold over the years. I think it would be transformative. It would. I mean, we always say ARC is, focused on technologies that are going to transform the way the world works and make it a better place. This is one of the most important ones.
Well, I know you focus a lot on this sort of disruptive innovation, which many people would say that Bitcoin is the most important revolutionary disruptive technology that we've seen really since maybe the creation of the internet. Before that, maybe the printing press. But how did you navigate the sort of cycles before you created ARC? I know you heard about Bitcoin in 2011, but right before that, we had the great financial crisis that Bitcoin was sort of born out of, and we had the tech bubble. How did you navigate all of those? And I'm sure that informed, how you invest in your company.
Sure. So in the 90s, yes, I was managing money, and I remember the tech and telecom bubble, and was very excited about the internet from its earliest days. I was an analyst on a lot of those stocks, and for a long time it took investors and analysts a long time to wrap their heads around what was going on. But we studied it and kept going, and of course, definitely rode the wave that became the bubble, and I was at a hedge fund. I had created it with a partner, Lulu Wong. And as we were going through that internet crisis, we were saying, "Wow, the bubble." We were getting a little concerned, and we had the luxury of using options, mostly puts at the time. So we fared fairly well through that. And then when I joined AllianceBernstein, that was my next firm. It was June of 2001, and we were in the middle of the bust. And I remember I inherited a portfolio with nearly 40% technology stocks. The benchmark at the time was around 35%, and everybody was hostage to benchmarks. Less so back then. I was surprised that there was that emphasis at AllianceBernstein back then on benchmarks. I took that portfolio, and within the next few months, took the position down to 11% of the portfolio, which was considered crazy. And I didn't even understand how crazy it was considered because I was never benchmark sensitive. So I didn't understand that many of the people at the firm thought I was committing business suicide by taking such a crazy risk. But it worked out. It worked out. And we came out of that doing very well. In terms of the next crisis, 08, 09, I cannot tell you. In 06, I remember there were 5 regulators who wrote a paper together. Now, this never happens. Usually they are fighting for power, with each other. But 5 financial regulators that wrote a paper that said, we are concerned about exotic home equity loans. And I said to my team, okay, game over. And we started taking risk out of the portfolio because I knew there was going to be a mistake. But it was a very painful period for us. And actually, it reminds me a little bit of where we are today, I hate to say. But if from late '06 through, we were just pulling risk out, anything housing related, especially. If it touched housing, it was out. And we were becoming just more risk averse. And we went through more than a year and a half of pure hell because we were pulling risk out of the portfolio. But oil prices, this is what I mean, it reminds me of today. Oil prices went from $60 a barrel in late '06 to $147 a barrel in, I think it was the spring of '08, before all hell broke loose. And we were under a great deal of pressure because normally when there's a bull market on, we outperform. We outperform in a bull market. We were underperforming badly, and our clients relied on us to outperform in a bull market, even if we had more downside in a bear market. So it was very painful. And today we see, now our portfolios are acting much better today than they did back then, but today we see oil prices, again, market manipulated because the demand destruction is getting pretty severe. China, Europe, even US, we're starting to see faltering demand on the oil front. And yet the oil price is still going up, causing a lot of pain. Anyway, so back to '08, '09. The world fell apart, of course, in '08, '09. '07, people said, oh, you were right. '08, no one, if you were full out in equities, which we had to be, we had no ability to move into cash, given our strategy. Everyone was hit very, very hard. So yes, those scars. What also happened, both because of the tech and telecom bust and even more so because of '08, '09, the financial markets transformed dramatically in the sense that portfolio managers and analysts started mimicking their benchmarks much more. That's what they were measured against. And we were benchmark agnostic, so we weren't doing that. But most of the analysts and portfolio managers I knew at the time were moving closer to their benchmark. So we looked like an otter duck as time went on. And in fact, into '08, we leaned into the crisis and, bought more aggressively into our strategies because they were hit so hard, buy low, sell high kind of thing. And it ended up working out. We had a spectacular recovery. But I think coming out of that, the leaders of AllianceBernstein and I understood that we did have philosophical differences, that, we could not, with our strategy, hew to any benchmark because benchmarks are just more backwards looking. The stocks at the top of a benchmark are there because of past success. And we're looking forward at disruption in the future. And so there's no way I could countenance a risk completion strategy where they would take a third of our funds and put them into the S&P 500. Mm-hmm. Our clients, they understood how volatile the strategy was. And so we parted for philosophical differences, and I started ARC knowing that that there was an unmet need for what we were doing, access to truly disruptive innovation that is not reflected in the broad-based benchmarks.
It's time for a quick break to hear these messages from my partners. First up, Bitcoin Amsterdam. The biggest Bitcoin conference in Europe is just around the corner. The second annual event will be held October 12th and 13th and bring together speakers from around the world, including the one and only Edward Snowden, Stella Assange, Balaji, Eva Vlardengerbroek, and so many more. Get your tickets with a 10% discount using code HODL. And don't forget to get your early bird pass to Bitcoin Nashville 2024. You're going to get the best price right now. And again, use code HODL for that discount. I'll see you there. Next up, Fold. Fold is the best Bitcoin rewards debit card and shopping app in the world. You can earn Bitcoin on everything you purchase, from Amazon to groceries to your Bitcoin conference ticket, with Fold's Bitcoin cashback debit card. And you can play to win free Satoshis or even a whole Bitcoin by spinning the rewards wheel. Head to foldapp.com/Natalie and you'll get 10,000 Satoshis when you sign up for Spin or Spin Plus and spend at least $20 on the card. All right, back to the show. Well, I recall you saying in some of the shows about how you saw that research was sort of disintegrating and people had turned much more passive. I feel like that's how investment really has been for really the last decade. It wasn't choosing individual stocks. It was just, throwing your money into an index, closing your eyes, and you're sort of happy, but not realizing that you're just tracking inflation or the inflation of the monetary base. So talk to me about, the risks, but also the rewards, and thinking differently, because Bitcoin is a massive part of that strategy, as well as some of these really big tech stocks that are, some of them have still performed well amid the rate hikes, but there are major headwinds because some analysts say that we are at the end of the era of QE. And then at the same time, others say, no way, our debt is too high. They're going to have to come in and print. So I know that's kind of a loaded question, but what are the risks and rewards of your strategy?
Well, first of all, we give our research away, and I can tell you some of the most rewarding moments of my career and life, I would say, is when someone comes up to me and my colleagues and says, "Thank you for educating us about this. We put our money in," and I would say the two top ones on this are Bitcoin and Tesla. We put our money in. We keep reading your research. We believe your research is correct. We're not going to sell. And our nest egg has grown. Or in some case, I was able to buy my house. Or in another case, I was able to educate my children. I mean, wow, that's pretty humbling. So that's a lot of the reward. But I think I also I love educating not just investors, but everyone, especially young people who who can take this kind of volatility and stick with it, keep their eye on the prize, and think about an incredible retirement if they make the right investment decisions. The young people today are much more savings minded than my generation was. And in fact, in my generation, it was the beginning of mutual funds. That's how far back I go. And I remember how difficult it was to get people, especially young people, to think about investing their money in equities for sure, because they had been under such duress for so long. But we knew, now that we were getting more disciplined monetary policy, that equities and fixed income were going to be good places. But consumers back then and investors back then were very scared. Very different today, and so they express a lot of gratitude for our research, and they have inspired us also to not only, of course, put an application in there for the Bitcoin ETF and other ETFs, but also to start a venture fund and get in even earlier. We started that; it's fledgling, but it's doing well. We've already had some liquidity events, which is hopefully not beginner's luck, but we're on our way. So I think the education, being able to educate, open people's eyes to this new world, these new opportunities, help them get on the right side of change so that their lives can be better, whether financially or emotionally or any which wise, from being on the right side of change and having the confidence based on education, that they are on the right side of change.
Mm-hmm. Well, Bitcoin and financial education in general is so key. I wish I had learned some of the things that Bitcoin taught me younger so that I could protect myself for the future and have a lower time preference and all of that. But so many people are learning about it right now through Bitcoin. So let's dig into some of those things because you see Bitcoin as transformative. It is still so early. A lot of people, they don't really understand that you could buy a fraction of a Bitcoin. They see it as too expensive. How do you educate folks that are just starting out? I mean, when people come in, especially during a time that's a bear market after a bunch of crypto implosions, and they see it as so risky or inherently, there's risk because it's digital and it could be hacked. And those are those initial skepticisms. How do you start to break down those barriers and explain what Bitcoin's value proposition is to the average person?
Well, I first describe what it is, and I ask them to listen very carefully to each of the words that I'm saying. It is the first global, private, meaning no government intervention, rules-based. If I didn't say digital, I should say it now, digital monetary system that the world has ever known. It is a very big idea. And in fact, what I often do is describe what Art Laffer said to me after he finished reading the paper. And, he basically said, I think I might have mentioned it, I've been waiting for this since they closed the gold window. Monetary policy has been completely unhinged. There's no discipline. We're going through booms and busts that are completely unnecessary. And I did say to him, I said, if we went back to a private money, and I'll get back to how we help people understand this. He's very excited about a private money, but in studying the history of private money in the United States prior to the Fed, 1913, I said, but Art, that was a period of booms and busts. And he said, yes, but they happened very quickly. What we're doing with monetary policy right now, they happened quickly back then without a terrible amount of damage. What we do these days is plug the dikes and make one monetary mistake after another, and we end up in a global, massive crisis that takes years to get over. So that was interesting. And I did say at the time, I said, well, Art, if this is such a big idea, how big is it? And he said, well, how big is the US monetary base, the reserve currency's monetary base? Back then it was 4.5 trillion. Today it's 8 trillion. He said, there's your answer. There's your answer of how big this could be if this is going to become an effective global monetary system. And so we ran with it, and we have not stopped running because you're right, we have just begun. And it is interesting to note that, we're up to 19 million Bitcoin, and we're going to 21 million. So the scarcity value argument, the store of value, is going to resonate even more because I believe when the SEC does relent, and it will, now that Chairman Gary Gensler is calling, the controversy around the Bitcoin ETF his personal Vietnam. So he probably wants to get rid of it. Our COO, Tom Stout, feels that we will have, not we, maybe many people, many firms will be approved for a Bitcoin ETF. And when that happens, that will bring with it an institutional acceptance that really could highlight the scarcity value of Bitcoin. And institutions are not the only story. If thank you for reading our Big Ideas 2023, and in there you see our building blocks to a $600,000 to $650,000 price, and perhaps $1 to $1.5 million price by 2030. We think most people in the world, at the very least, should have some of their assets in Bitcoin as an insurance policy against confiscation of wealth. And that can happen in a number of ways. It can happen outright. So to see MBS in Saudi Arabia lock his cousins up in the Ritz Hotel and just take their wealth, that's confiscation. That's outright confiscation. And then, of course, there's inflation, which is also confiscation of wealth. It's a cruel tax. It's very regressive. And Bitcoin would be an important hedge against that for anyone, but especially for lower income people.
Absolutely. I want to come back to that price prediction. You have that bullish case, the bearish case, and all those scenarios. But first, you know, I think that so many people out there recognize that there's a problem. There's this underlying feeling, I think now more than ever, of just a frustration, a feeling of being left behind. You know, things are getting more expensive, especially the things that, you know, families really want to afford, the cost of education, a home, retirement, and all these things feel more and more out of reach despite people working harder and harder. And we in the Bitcoin space talk about that, right? That is the theft of inflation that is so pernicious. People are working harder and harder for money that's essentially worth less, but yet people are still so it's almost like they don't want to talk about these issues and peel back the layers and see that Bitcoin could be a solution. And instead, a lot of them are turning to politics. And you mentioned earlier, I mean, these monetary decisions, a lot of them are based on political decisions to be short term, right? Short term thinking, solve the problem now in the immediate, don't think about the long term consequences. So how do we get people out of that and asking the deeper question about what's wrong with the money, what's broken, and that there is this fix through technology and through decentralization and scarcity and the beauty of proof of work, that there is a potential solution?
Well, first, I would give them a little bit of a history lesson that, you know, if you look back to what happened in the 70s, and many people fear that we are in a period like the 70s now, especially hearing all of these wage negotiations and settlements, 10% per year, that feels very 70s. I personally do not think we're in the 70s, but just to help people understand what can happen when you basically unhinge monetary policy, close the gold exchange standard. The lack of discipline started in the 60s, actually, Vietnam War and Great Society. So guns and butter, the government could pay for everything. Sound familiar? Sound familiar, right? And what happened back then is over 15 years, the Fed accommodated profligate government spending. So it just started with Vietnam and Great Society, and it only got worse. So that was a 15-year plus period by the time Volcker got in, and he had to crack the whip, namely starve the economy of money relative to what it had been used to. And
not at the debt levels that we have now.
Right. And debt, exactly. And so we ended up with double-digit inflation. And I remember with surtaxes, businesses had to pay in interest more than 20%. That was just a killer. Inflation was absolutely destroying purchasing power. So, and I remember my father back then. I remember my dear father back then, talking to me about it and saying, and talking to my mother especially, and I would overhear these conversations. My paycheck, we can't buy as much food. This is terrible. So why is it not the same thing now? Because we have profligate spending in the U.S. And the debt levels are just incredible. Part of the reason is I think monetary policy is making a different mistake. So M2 growth is negative on a year-over-year basis, and that means the Fed is not accommodating this government spending. But what it also means is the government spending is going to crowd out the private sector. And I think you're beginning to see that happen now. We think there's going to be a harder landing. So why don't people, take the lessons of history? Okay, I've just given you 2 periods, and look at what Bitcoin's trend has been. And if you look at if you become a reader of our Bitcoin Monthly, I don't know if you've seen it, Natalie. It's we put it out monthly, and it's a lot of David Puel's on-chain analytics and analytics that he created himself. What it does is it monitors the health of the network and gives you a sense of the fundamental dynamics taking place in the Bitcoin network. It's phenomenal what we can learn. It's so much more transparent than the Fed, which issues these minutes in cryptic notes, and then has every Fed member come out and contradict each other. So you have absolutely no idea what they really think and what's really going to happen. You can see everything on the Bitcoin blockchain. And we've even been able to identify when trouble was brewing because of the algorithmic stablecoins and the hedge fund exposure, and just watching the money move around. We knew there were a number of hedge funds, we guessed correctly, were hurting. So why don't people pay more attention to this? I think because it's very volatile still. And what's the alternative in their minds? Well, the prices in the real world aren't that volatile, and interest rates aren't that volatile. So they're making false comparisons, I think. And it just seems like Bitcoin is in, as you say, it is in the earliest days. And so is it in the Wild West? And what we do in our analysis is show, yes, it's volatile. So pick your spots. But and my children are averaging down, weekly, or averaging in weekly. And they're very happy, because if you look over time, what has happened with Bitcoin, the trend is definitely up, higher highs and higher lows. Right. And that's very reassuring. And we also have a chart in Big Ideas where you can see the returns from Bitcoin over a 3, 4, 5-year period. And they outperform all other assets. But you have to have that long-term time horizon, I think.
Well, and Bitcoin is showing that on a risk-adjusted basis, that volatility can actually provide a lot of benefits for a traditional portfolio. Next up, I want to share with you about CrowdHealth. Health insurance costs are sky high today, and you send your money every month to a fiat corporation only to never see that money again, even if you don't get sick. But if you do need care, you end up having to pay even more out of pocket. But luckily, there's an alternative, and it's all about community. CrowdHealth brings together Bitcoiners who crowdfund each other's healthcare. So how it works is when you need a doctor or hospital visit, CrowdHealth negotiates down the medical bill lower than what insurance would be, and the community helps you cover the costs. You get to save the money you would have sent to an insurance company, and hey, why not put it into Bitcoin? To sign up, head to joincrowdhealth.com/Natalie. All right, next up, I'm excited to share that I am an advisor for the Orange Pill app. If you haven't downloaded this app yet, then you're missing out on connecting with Bitcoiners in your area. The Orange Pill app is focused on building the social layer for Bitcoin and helping create opportunities for in-person connections and community building. Come join us and use the referral link in my show notes to start connecting today. All right, back to the show. Let's go back to those ETFs because that would be a path for people to invest in Bitcoin in those more traditional brokerage accounts. We have so many applications, including ARK Invest for that ETF, spot Bitcoin ETF. What is going on with those? I mean, why hasn't one been approved yet? And what do you think will happen? Some Bloomberg analysts say 75% chance that it'll still happen this year.
Okay, before I answer that, I just want to give one more booster for people who are a little reticent. If you look at what happened during the regional bank crisis this year, we learned a very important lesson. We had regional banks stocks plummeting, some of them going bankrupt, and Bitcoin rose from 19,000 to 30,000. What did that tell us? It tells us that because of the decentralization and the transparency in the network, that counterparty risk is not an issue for Bitcoin. And so there was a flight to safety into Bitcoin. Think about that. As bank stocks were plummeting, that spoke very loudly to me. And I think the other reason people have been reticent is they heard about FTX. And if they think about FTX, though, FTX proved the point that you really want to be involved with a Bitcoin network and not something like an FTX. Why? Bitcoin is transparent and decentralized. FTX was completely centralized, completely opaque, and a fraud. Sam Bankman-Fried did not like Bitcoin. Right. I understand why. He thought he was a master of the universe and could control everything. Well, he couldn't control Bitcoin, and that's its beauty. That's its beauty. So now with the ETF, what is going on? I think, we know the research people at the SEC, and they know what they're talking about. They are really good. We've met the head of FinHub now, who reports directly to Chairman Gensler. And for me, the disconnect is they know so much and they are so good that I believe this was much more Gary Gensler standing in the way. I don't know for sure because they could never say something like that. I just know from how we have discussed Bitcoin with them that they really understand it and they understand its merits. Most important. So this is Gary Gensler. Why he allowed, and I will say he because I think he's the gating factor here, why he allowed a Bitcoin futures ETF, which involves counterparty risk, and not a Bitcoin ETF, which does not involve counterparty risk. In fact, it is backed, ours would be backed by Bitcoin 1-for-1 in cold storage at Coinbase. That's why Grayscale has won its case. It is that argument. And so I think Gary Gensler's personal Vietnam is coming around to haunt him. I do think the SEC is moving now. He has, in effect, said, hey, I'm not the only decision maker. There are 5 commissioners here. That means some of the research that we believe is percolating up to those commissioners might be getting through to them and might be the grounds now for the approval of a Bitcoin ETF. And we don't think that the SEC will approve just one. They will probably approve a group of them. And that means it will become a marketing battle. And we do hope that our research, how much we give away our research, mostly because we feel it very important to educate. It's one of our mission and values. We hope that helps us as we, hopefully being one of those approved, go out and start marketing.
Yeah, I'm understanding that there is this first mover advantage, but if they do kind of with the stroke of a pen approve all of them, there are so many that are going to be out there. I mean, how do you set yourself apart? What makes any of these ETFs different? What would be your pitch about ARK Invest? And do you think it could happen this year? Because I know that they recently delayed preemptively.
It could happen this year, given the movement we're seeing. I think most people would say it will happen early next year, but it could happen this year. Okay, so we are partnered with 21 Shares. 21 Shares is the largest crypto ETP provider in the world, based in Switzerland. And they have put in place an infrastructure that is proven. They also have their research, and which comes at the world more from the financial products angle. Our research comes from the world of let's pull this apart, really understand it, and explain it to everybody. So you've got both kinds of research, and I think our research is the most prolific. I mean, our first Bitcoin blog, no, it was a white paper, was in 2015. And then in 2016, we collaborated with Coinbase on a paper called Bitcoin Ringing the Bell for a New Asset Class. The first paper was, could this serve the three roles of money? And so we have been researching since back then. And I can tell you, we were new in the ETF world in 2015, and ETF journalists at the time said, oh, great. They put something called GBTC in their ETFs. Bitcoin, what the heck? This is just a marketing gimmick. And here we had our research. Clearly, they weren't reading it. And so I think we've proven our stripes, and we are offering so many services. The Bitcoin Monthly, the crypto brainstorm, which is monthly, featuring people who are working they're sort of in the background. They are making this happen. We want to highlight them and give them the credit they deserve, and give them an opportunity to come forth and talk about how they see the world evolving. Our last crypto brainstorm was on the convergence between Bitcoin and artificial intelligence. And I would highly recommend that one, because and you'll see me in there saying, wow, I can't believe this. We've got, I think I summarized it by taking two phrases from that others had contributed. So the scarcity of Bitcoin juxtaposed against the infinity associated with artificial intelligence, and kind of and how this could proliferate throughout the world and provide, division of labor, jobs, deeply into the emerging markets. If you're interested in learning about that, tune into both of our first two crypto brainstorms.
Yeah, it is a fascinating convergence and intersection, Bitcoin and AI will need a digitally native currency that is secure. And I think both of us would agree that Bitcoin not only meets the properties that make a good money, but elevates it. Before we wrap up, I really want to hit that $1 million price prediction by 2030. And I have your chart that I pulled up from Big Ideas. I'll probably put it up on the screen if you're watching this on video. The bear case is 258,000 per Bitcoin. The base case, 682,000, and the bull case, 1.48 million as your price target. Can you talk to me a little bit about how your team reached this conclusion? Because folks out there, again, they think they're late, but this shows that, the compounded growth rate every single year, they're very, very early, and this has a huge asymmetric potential.
Yes, if you look at the little table on that page, you'll see the building blocks and how conservative they are. I think, now this is from memory, and sometimes I get one Big Ideas and another mixed up, But I think the institutional allocation to Bitcoin in the base case, I know at one point we said 2.5%. That may have gone down a little. But if we're right, that assumption alone, I have been in the markets for a long time. And as new asset classes evolve, what institutions do in particular is they tiptoe in. They start with 1%, and then they migrate to 2, and then they migrate to 5. So I think in this one it's 2.5% for the base case. When there's a new asset class, it tends to end up in the 5 to 6% range. This happened to real estate. It happened to private equity, venture capital, which is now much more than 6% in many institutional funds. It happened to the whole category of emerging markets. And so I think it's that one alone is very conservative. And if you look at another one, the corporate balance sheets, Tesla, Square have Bitcoin on the balance sheets. But we make very cautious assumptions. And I think the corporate treasury assumption is 2.5% of all cash and cash equivalents in Bitcoin. And the bull case is 5%. If we're right and the purchasing power of Bitcoin becomes so obvious in the years ahead, meaning the purchasing power goes up instead of cash, dollars, staying pretty flat, if not in real terms deteriorating, then more and more corporate treasuries are going to be putting Bitcoin on their balance sheets. And in fact, they'll be the analysts will start questioning them. Why do you have 95% of your cash in a depreciating asset when you could put it into a cash equivalent like Bitcoin and have an appreciating asset? So remittances is another very big market. We assume 10% of remittances in the base case and 25%, instantaneous, no fees or minimal fees compared to 8% fees as migrants send back to their home countries. Mm-hmm. Sovereign treasuries, 1%, only 1% in the base case, 5% in the bull. Just like corporate treasuries, they'll be under pressure to start increasing their exposure to Bitcoin. And emerging markets, not just the state treasuries, but all of the populations who are subject to these swings in their currencies and absolute demolition of their wealth when they go through hyperinflations. We assume 3% of the populations in the emerging markets, 3% of their assets in the base case go to Bitcoin and 10% in the bull. So those are some of the cases. And then there's the other utility economic settlement network case, and that's 5% of all settlements in the base case and 10% in the bull case. So that gives you a sense of how we have built those two estimates, and those are pretty conservative assumptions, we would suggest.
I agree. You're talking about these small percentage allocations. And when you think about these big, classes of assets worth hundreds of trillions of dollars in the world, like equities and real estate and bonds, and if Bitcoin just eats into a little bit of each of them, I mean, the amount per Bitcoin could really be life-changing for a lot of people. And I know so many people are hoping for that because it's hard to achieve financial security, harder than ever, including in this country, which my family came to for the American dream, but it's just harder and harder to achieve that. So I just want to ask you, what drives you? Because you mentioned earlier how happy you get when people come up to you and they say, I learned from you, and maybe your investment strategy helped me achieve one of my financial dreams. But what motivates you? Because again, we're at a time of a lot of change, right? And
Mhm.
you're on the cutting edge of it. These new technologies emerging, but sort of the end of easy money, at least for now, which Bitcoin has benefited from the era of QE. It's really only existed in QE until recently. So what's that message? What drives you and makes you feel like this is part of the meaning of your life?
Yes, we have never seen 5 innovation platforms evolve at the same time. So, robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing, the last one in the life sciences space. Never seen that. You have to go back to the early 1900s to see 3 platforms: telephone, electricity, and the internal combustion engine. What motivates me is, first of all, we're in the investment business, and I know the last few years have been quite trying, but we do believe that the market cap that will accrue to disruptive innovation will scale, and this includes Bitcoin, will scale from somewhere in the 10 to 15 trillion dollar range today, up to 200 trillion in the next 5 to 10 years. And what we're trying to do is get our investors on the right side of change. So many people think rising rates will kill a strategy like ours, and that's how the stocks have been treated. But truth will win out. Innovation solves problems. Bitcoin will solve problems. We just talked about a lot of those. So will those other 4 platforms. And what we think now that QE is done, that we could be entering an era of deflation. And we think that Bitcoin, I mentioned it earlier with the regional bank crisis, will be an antidote to the counterparty risk that is going to become apparent as deflation sets in. I know this is very hard to imagine given oil prices are back near $100, but innovation solves problems, and we believe that it will, with autonomous electric vehicles. We think that the oil price is destined to go down quite dramatically. So innovation solves problems. We would love not only our investors, but parents and grandparents and students to get on the right side of change. And to that end, I never believed this would be possible, but we moved our headquarters. We're hybrid, but we moved our headquarters from New York City to St. Petersburg, Florida, 2 years ago. And I never dreamed this would be possible. I started a foundation a few years ago with educators, taking ARC's research and making it age appropriate for 6th graders.
Wow.
This fall, ARC's research is the science curriculum for all of the 6th graders in Pinellas County. So I'm really excited about that. So I think this education has to start at a very young age, and we want to inspire young people to get on the right side of change and then enjoy a wonderful life just riding the change instead of being caught in the disruptive innovation that is going to disintermediate and perhaps destroy certain industries.
Mhm.
So I'll leave it with get on the right side of change. There's so much hope, so much opportunity, and it's going to be so exciting.
I love that, Cathie. This has been so inspiring. Education is key, and I think Bitcoin will be such a tool for economic empowerment for people all over the world. It's been such an honor to talk to you. I hope we get another hour at some point because I'd love to still ask you so many questions about AI and Tesla and all the other things that you're investing in and all your work. But thank you so much for the work that you do and for sharing your time.
Well, the work that I do is really um, uh, our analysts hard at work every day, and our chief futurist, Brett Winton. And I'd also like to thank you, Natalie. You are doing the world a great service by educating them, about an important way to get on the right side of change and bringing a lot of people hope and financial security and and general happiness going forward.
Thank you so much. We all need that. We all need that.
Yes,
More
we
hope
do.
and
We
happiness.
do. Hope and happiness. Yes.
Thank you so much for checking out the video version of my show. If you want to see more content like this, make sure you're subscribed to the channel and hit like on the video. And please reach out with feedback or guest suggestions. My email is natalie@talkingbitcoin.com. I'll see you next time.